Hello guys, it's Max here from Daily Market Movements, and just before I start today's video, I just want to make you all aware of the trading signal service that we have here. If you would like to receive trading signals from either myself or the rest of the team here at Daily Market Movements, then you can do so simply by visiting our website. Once on our website, you'll see that we charge a very small fee of $249 for a year's membership, so it really is great value for money. What I'm going to do for you all is leave our website link below this video in the description of this video. So if you are interested in joining our team, simply scroll down now, click on the link which will then take you to our website, and then that's where you'll then be able to purchase the service. However, in front of me is the Nasdaq100 futures chart, and as you can see, today we're trading in the red ever so slightly. Before the US markets opened, we had all three indices, that's the S&P 500, the Dow Jones 30 and the Nasdaq100 surging towards the upside. At one point, the Nasdaq was up around 1.5% and we were trading as high as 11,400. But since then, since the US markets have opened, we have pulled back and we're now trading in the red. So it's kind of like a similar situation as to what happened yesterday. You know, we started the day in the green, and then as soon as the US markets pull back, we then sold off. We're at a very vital part in this chart from a technical perspective, and that is, as you can see, we're now rubbing up against the red line on the chart, which is the 50-day EMA. This is an area where I believe our sell-off has targeted. So since Thursday, a week and a day ago, when we had that the sell-off. That's when the sell-off started last Thursday. I think that we targeted the bottom of we targeted the bottom of this uptrend that we've been in since March, and then we broke below that, and then from there it was a given that we were going to target towards that $11,000 price level, because you know it's a large psychological number. But as well as that, that's where the 50-day EMA is, and so far the 50-day EMA has done very well supporting this market. I personally believe that it will continue to support this market, but what I'm looking for is a large impulsive candlestick, kind of like the one that we had back on Wednesday, you know, when we got that first bounce where we're trading up around 3%. I'm looking for that again to give us that push, that push what we need back up into the uptrend. There are many catalysts as to why the stock market should fall, but there's also many catalysts as to why the stock market should raise. And I'm going to start by the positives. First of all, we have the Fed supporting the stock market. As the old saying goes, you should never fight the Fed, and that's not something that I plan on doing. Because the Fed is pretty much the reason as to why we are trading so high. In fact, no, they're not. They're not the only reason as to why we're trading high. They're also trading. The Nasdaq100 is also trading very high due to the fact the stock markets have been able to adapt their business models to the pandemic, to these global lockdowns so well that they're actually making more money during a lockdown than they were this time last year. So their earnings have been very strong, and personally, I just find it very, very difficult to see the stock market falling another 10% with the earning figures that they are. That are coming out. One reason as to why I may think, obviously the stock market was overbought. The RSI tells us that the stock market was very frothy, and this pullback was welcomed. It was healthy, but you know, one potential reason as to why we've had this pullback as well is I think that investors are trying to give the Democrats a nudge with regards to this second stimulus deal. You know, people in the US have been used to getting around $600 a week in unemployment benefits, and now they've gone straight to zero, which, you know, is painful, right? A lot of these people are now really struggling to make ends meet, and a lot of these companies will struggle as a result of that. And I think investors are just trying to give a nudge to the Democrats, saying, you know, if this market falls another 10%, you're going to have to do a deal with the Republicans. It may not be $400 a week. The Republicans may have to sacrifice $100 and agree maybe at a $300 a week deal. But they can't really afford for the stock market to fall too much. So I personally believe that the stock market will hold at a 50-day EMA. I am bullish, and 12,500 is my longer term target. I think that we will get there within the next 3 months. We just need a catalyst to give us that that boost to back towards the upside. But I am bullish going into Monday next week as long as the 50-day EMA holds. If we do get a daily close below the 50-day EMAs, there's still a few hours left of this trading session on Friday, then it could be that there could be a chance that we trade as low as the 200-day EMA, which is all the way down at that $10,000 price. So it could be a case that we go down there and then we trade back up towards the 12,500. But I really do hope that the 50-day EMA holds, and it's just a case of this where we trade straight back up to the 12,500 level. But I am bullish. I am a buyer long term and short term. No interest in selling. We also had the positive crossover here with a 50-day EMA pierced above the 200-day EMA towards the upside. That indicates to us that we're in a new bull market, and that's exactly what we are in right now. We're trading at all-time highs. Not currently, but we were this time last week. Therefore, I'm bullish.